And again, but when you close a couple of deals with Opcity, then some agents do want to go through Zillow or Realtor.com or any of the other ones. But Opcity is definitely a good option. But I'll follow up and I'll keep you posted. Okay.
Okay, sir. Thank you,
All
sir.
right.
Thank you.
No problem. All right, guys. So let's get started. Thank you so much for joining. I hope everyone can hear me well. Today is January 31st, 2024. Welcome to LJ Housing Market Update. And let's get started with our interest rates. So that is the one of the most important factor when it comes to home buying. So as realtors, we should stay up to date, and majority of you guys are. Some of you guys are watching this recorded later on. So with your Freddie Mac's interest rates, they were hovering around 6.69 versus your 15-year mortgages 5.96. So I'm going to show you a little bit later on, even when you go with 30-year mortgage, you still can benefit, where you can pay off your mortgage a lot quicker than 30 years and not be stuck with the higher payment for 15 years. So I'm going to go through those pros and cons for you. Okay. But when you look at this, you want to tell your clients as well, hey, when you're looking at any rates online, it could be on Google, it could be on any website. Just tell them majority of these people, majority of these lenders are showing you top tier scenario. I want you to use that word, top tier scenario, meaning that these credit scores are, these interest rates are available people with good credit scores. So if your credit scores is 780 or more, that you might qualify for this. If you're putting larger down payment, you may qualify for this. If you're going to be living there versus renting it, if you're going to live there, you're going to get better interest rate. If it's a single family versus two family, a single family will get better interest rates. Okay, there are many factors when it comes to interest rates, but just tell them, hey, this is a top tier scenario anytime you're looking at the headlines as national averages. So same thing goes for your mortgage news daily here and for your 30-year fixed conventional 6.87. So you guys been paying attention to this on weekly basis with me here. Some of you guys are looking on daily basis with mortgage news daily, which is great. So you guys maybe saw that it's coming, the interest rates are coming down a little by little. They're not coming down by 50 basis point or full 90 basis point. They're coming down slowly, and that's what we actually want. We don't want it to come down all the way in one shot and it'll be a chaos, right? And we want them to stay low for a longer time. So again, when it's your 30-year fixed conventional 6.87 versus you have clients who want to go with FHA, maybe their credit scores is low, right? And they don't meet the guidelines. They don't meet the guidelines for their conventional. Then FHA is great, right? And with FHA, it does have higher upfront cost, but it gives you a little bit lower interest rate. Okay, so you have to tell your client, hey, whatever your options are, go speak to a loan officer and see your options for your conventional and your FHA and see which one you want to go with. Your buying power, your client's buying power is increasing. And this scenario I'm about to show you is increasing about $50,000. So it makes a big difference for especially for people who are trying to purchase for a property that was around $600,000 and but their pre-approvals for 550. Right? Those things are changing. The times are changing, and I want you guys to be aware of this and take some action. So if someone is getting a $700,000 loan with today's interest rates versus maybe he got a pre-approval for 7.62, that person in today's market can qualify up to $700,000 versus 650 when it was 7.62. The mortgage payment did not change because we're saying, hey, if I want to spend $4,600 on my mortgage payment, what is the loan amount I can get? It's $50,000 different between 650 to $700,000 now. So take some action on this when you're speaking to your clients and hey, you have got your pre-approval a few months back. I really recommend that you go talk to your loan officer again. Okay, especially people who, if you see a pre-approval date in November or October of last year, that was when we really hit the peak around 8% interest rates. So those clients may even qualify for even higher. Okay. So now we want to take you guys on a journey for affordability. So there's going to be a household income increasing slide by slide and show you guys maybe your client doesn't qualify today. Maybe they say, hey, I'm just a one person right now. Maybe you guys are discouraged. Hey, I don't want to show this person. He doesn't have a pre-approval. He doesn't make enough and everything. But guess what? He might come up with a co-signer out of the blue without even you knowing it, right? So when the time comes, he might have a sister, brother, cousin, friend that's gonna be a co-signer, and they're gonna be giving them the helping hand and buying that property, right? So annual income $100,000, down payment $50,000, your monthly debt. This is your minimum payments that you have to make. $150. Today's interest rates averages 6.87. We're gonna use property tax on the little bit higher end. One of our agents said, "Hey, majority of your taxes are for 5,000, but I'm always in Long Island and everything's 10,000 plus." So I want to give you guys an example for $10,000 property taxes. Okay, your property insurance about $1,500 on average, and we're keeping this DTI, the debt to income ratio, at 45%. Okay, so this family can purchase a house for $450, $450,000 in Nassau, right? So maybe if they're looking in Nassau, their monthly payment is going to be $3,600. So you have a job to do to find them a property that's going to be 450. Really tough job to do. So you have to tell them 450 is kind of low. I'll see what we can find for you, but it won't be a lot of properties. Next slide is going to be maybe the same family has a co-signer now. Instead of $100,000, their income is $125,000. Okay, if it's 125 with 80,000 down payment and their monthly debt 150, everything else remains the same, they can qualify for $625,000. Huge difference when we're looking at 452. So the point of these slides to show you guys, please do not be discouraged when they say, "Hey, I don't know if I don't have a pre-approval. I make, about $80,000 or $100,000." Right off the bat, you might say, "Hey, he's not gonna be able to get $600,000 property," but just rest assured that he can bring in a co-signer to help him out. And how about people with higher, income or higher down payment? So annual income of $150,000. So again, this could be one person or it could be more than one person, as long as both of them added combined income is 150. Their down payment around $100,000. Their monthly debt. So let's say now you added a cosigner. The bank wants to know for that cosigner too. Great that you're making $50,000. What does your debt looks like as well? So it's as important as your primary borrower to know what is their monthly debt. Everything else remains the same. Now they can get a property that's maybe $772,000. So it's a journey for these guys. Maybe they were looking for $800,000 property, and the loan officer might say, "Hey, with 45% ratio, you qualify for 772, but if I take it to 49%, maybe you qualify for even higher." Okay? So just don't look at that pre-approval and determine that, hey, this is it, they cannot go any higher. There are many different possibilities when it comes to affordability. There's different loan programs. This same family, if they were to go with the FHA up to 54%, this will go above 850. Okay? So the home price maximum affordability price can change for them. Any questions on affordability, guys? All right. Next, I want to show you guys. We mentioned that sometime, some clients want to go with 15-year mortgages. They say, "Hey, 30 years, I know I'm going to be paying a lot of interest, and it's going to take me 30 years versus it's going to take me 15 years, half the time, and I can pay this mortgage." Great. If your income is great, you are able to make these monthly 15-year mortgages payments without any problem. Big ups to you. But if you are a first-time home buyer, you don't have a lot of money laying around, and you cannot afford that 15-year mortgage, you still can pay off your mortgage earlier than 30 years, right? Maybe some of you guys are homeowners, right? Maybe a few of our agents bought, recently they became a first-time home buyer, homeowners last year. So this applies to you as well. So if your mortgage payment is $5,300, and out of that 4,400 goes to your principal and interest every month, you just want to make $300 payment that's going to be extra towards your principal. That $300 that you're making extra is going to have a positive effect. is going to save you 4.9 years, almost 5 years in your um, that that loan that you had for 30 years automatically becomes 25 years, right? You because you're paying $300 extra every month. On top of that, it's going to save you around $175,000 in interest. So it makes a big difference. So, you don't have to go with 15, you still can go with 30 years, and you can save a lot of years just by making extra payment. Is this $300 fixed? Absolutely not. It's all up to you. It could be a monthly payment of $100, $200, $300, whatever you can afford. Just make sure that it goes to your principal. The best way to do this, let's say all the mortgages are due in the first week of every month. So once that first automated payment that goes through, then on maybe the 15th or the 21st, you want to go back to the portal, or you want to call your bank and say, hey, I want to make extra $300 payment or 500, whatever you can afford, and I want that towards my principal. If you do those two steps, it will save you a lot of years and it will save you a lot of interest. Okay. Next, guys, your Fed meeting is happening today. So I'm going to be telling our loan officers to follow that. But as realtors, we should be following that as well and see where does the inflation land, right? What does your Fed actually says? Will they do any cuts in March or not, right? So current inflation is at 3.35%. If the inflation comes down, the interest rates should come down as well. Okay. Fed meeting is today, I just mentioned. Do not expect them to cut rates today. If they do, that will be a surprise. It'll be a good thing, it'll be a surprise to us. But we're expecting, as mortgage loan officers, as housing experts, we are thinking that they will make the change or cuts in March 20th. Okay. Home ownership, guys. We want more and more, even our realtors, that are renting right now, to become a homeowner, right? It's going to be a process. You need to work on your credit scores. You need to save up enough money for your down payment and your closing cost. So it's a process. You are a realtor. You're convincing other people, hey, this property is good. You got to do that for yourself. We have a closing today where one of our realtors is actually closing his own deal. So it makes us feel even better, right? So if you're renting, we want you to be on that level, right? In America here, there's about 65% of these home ownership rate right now, right? And that has been consistent. It's been in 60s for quite some time now. But more and more people who would buy instead of renting, this rate can increase. Okay. Some of the headlines here in the news for relating to your mortgages and real estate, that the home prices ended 9-month upward streak in November, right? The home prices, we have seen that it was going up and up and up. Even if it comes down a little, it should be fine, right? If more inventory increases, some of these home sellers are saying, hey, should I wait to sell my house? I might be competing with other sellers. Of course, you're going to be competing with other sellers when you are putting a property, when the interest rates are coming down, because other sellers were trying to wait for the same thing. If the prices come down, will the prices come down? We highly doubt it. Why? Because the inventory is still not enough. Even if it doubles, it won't be enough. Okay. Buying power is up $40,000 as your rates coming down right now. I just gave you an example, and it was a $50,000 gap when we did that scenario earlier. So just to rest assured that there's at least $30,000 to $60,000 buying power added for your buyers. So they might be able to qualify for a bigger house or in an area that they were not interested before. So speak to your clients, feel them out, tell them, hey, your buying powers is up, and they were like, what the hell does that mean? It's like, hey, go talk to your loan officer. The interest rates are coming down, and see how much you qualify for in today's market. Okay. Your December pending sales saw the biggest increase since 2020. Things are changing. Things are moving around now. People are interested in buying. So just be part of those deals, guys. Mortgage rates tick up but remain under 7%. And that's what we want to see. And hopefully they come down into lower sixes. Right now we're mentioning 6.87. I hope in the next couple of meetings that we would have on Wednesdays that they come down to around 6.25, 6.3. That will have even more buyers coming to the market. Okay. Your home housing demand rises as inventory falls, right? The inventory is not increasing. We just mentioned that many times. Even if it doubles, it will not be enough. Okay. There's some people still trying to buy $1 million houses. In we have that in our database, $900,000 house, $1 million house, and when they want to buy that, they feel like they can afford it. But when they go to the mortgage loan officer and they say, "Hey, your mortgage payment is going to be around $6,000, $7,000," they say, "Hold up, no, I just don't want to do this right now. I have the money. I just want the interest rates to come down a little bit." They're going to end up paying higher prices. Simple as that. Supply and demand. Okay. Wondering another question. Wondering if I should buy a house now, or if you should wait. Right. According to the experts, we are one of those as well. If your potential buyer is a secure financial position, right? That means they have a good income, they have enough savings, right? Their credit scores is good. They're ready to buy. They're simply waiting for the interest rates to drop. Those pool of buyers should be making that move now, right? They don't want more people to qualify for that same house. So if you're in the right position right now, you should be taking action. If you're not, you're going to be missing out. Okay. And consumer confidence hits 2-year high, right? Again, the interest rates are coming down, more people are interested in buying. So the point of this slide is that your leads may be ready, but are you mentally ready or not? Are you actually thinking that the market is getting better, or are you one of those naysayers and say, "Hey, no, the market still sucks. I don't think I can go under contract," or there's just not enough properties out there. All those things are negatives, right? You have to work with whatever we have available on KV Core, whatever is listed on the market. Work with that, right? Be more aggressive. Your clients are. They will leave you. There's no way to sugarcoat this, guys. They will simply leave you and they'll be working with another agent in no time. So please make sure your leads are ready. I just want you guys to be ready as well. Okay. Next, guys, I want to spend some time here on home buying myths, right? These are the myths that people actually believe in. So I want, if anybody, maybe you are sitting in a dinner table with your family, friends, and they're coming up with these conversation, or you're speaking to your client about this, right? You want to seem professional. You got to know these things. Number one is that a 20% down payment is required. Absolutely not. Tell them there's many options for FHA and conventional where you don't need 20% down payment. And they say, which loan officer would do that? I heard that conventional, I need 20%. No, you can come to our office and we definitely have these options. You can go to other loan officers and find out from them as well, right? You can do a Google search. You can just break the myth, have that conversation with them that you don't need 20% down payment. Next is that working with an agent is expensive. Is it? You're finding them a house, right? That's a house is the most expensive thing that they're buying in their lifetime. The house is either worth 500,000, 700,000, $1 million, more than that. They're already buying an expensive item. The agent is not expensive, especially a buyer's agent. How many properties have you shown this person? Right? There's one of our agent, showing a luxury property to one of his client, and showed as much as 30 properties already. Right? There's always something wrong with this. This person, the agent is spending so much time and just to find them the right property, and they're not charging them anything, right? Who's paying majority of the time is the seller paying for this, right? We already have this issue, but whatever is listed on MLS is negotiated by the listing agent. You're getting paid from the seller side. If you're having this conversation, "Hey, I need to get paid. If I don't get paid from the seller side, then it's different, but it's still not expensive." Okay. Next is that renting is cheaper than buying. Depending, if it's a short term, renting make sense, right? Hey, you're not too sure if you're going to live in that area for a long time or not. But at the same time, if you're going to be living there for longer than 3 to 5 years and you have a steady job and you're ready, why would you be spending money on renting and not buying? With buying, you can build equity. And I want you to use this word when you're talking to these guys that, hey, you can build equity when it comes to home buying versus renting. Okay. A perfect credit score is needed. No, you should memorize these two numbers. Hey, you need 580 for conventional, sorry, 580 for FHA and 620 for conventional. So for if you want to go with the lowest, it's 580. If your credit scores is below 580, start working on that. Improve that much as possible. But you don't need 800 credit scores, right? I was just sitting with one of the family members, and they're trying to purchase in New Jersey, and the husband or the wife said, "Hey, my credit scores is about 800." The husband said, "I'm still working on that." He didn't disclose what is his credit scores. I told him it doesn't have to be perfect, but you guys need to know what is the number. If wife already has 800, good for her. Now let's work on the husband and see what is the minimum we need. 580. Get to that so we can get you guys for FHA. If it's already 580, let's take it to 620 so we can give you conventional. If you want a really good interest rate, increase that much as possible above 700. But we know that it doesn't happen overnight. It takes some time. So you don't need a perfect credit scores. You just need to know your guidelines. A accepted offer is set in stone. You guys know this until it's fully executed, then you have a file under contract. Before that, anything can happen. You might be really excited, hey, my offer got accepted. Okay, great. Now is the home inspection. If home inspection, everything went well, we have no issues, the buyer spent $500 home inspection, okay, and now all of a sudden you get a call from the listing agent, hey guys, we have a higher offer. I apologize, but I have a higher offer. Are we going to go with that one? What do you guys want to do? But wait a minute, my offer was accepted already. Nothing. You can't, like, it means nothing. Okay, there's some attorneys, seller's attorney, that will send out 2 or 3 different contracts. Hey, whoever signs it first comes back to the seller's attorney, and then the seller will sign. The seller will sign only one contract, but he cannot sign and be bound with multiple. He's going to sign with one, but they can send out a couple of different contracts because they don't know which buyer will sign, who will put the highest earnest deposit, which one has the best offer. So when it says accepted offer, don't think it's set in stone. Okay? All right, guys. Next, let's talk about Mr. Arby here, right? He violated, so I want you guys to learn from him. So he was a rental agent in Manhattan City here, and the rent for a one-bedroom unit was 1725. So he made this thing that he's asking for a sky-high fee to rent out this place. Guess how much he's asking to finder's fee? How much is he asking for that? $20,000. My lord, we don't even make those in residential, working all this hard and everything for one unit. For instead of just saying, hey, one fee, whatever the rent is. Usually we charge one rent as a listing agent. Usually half goes to the tenant agent. Out of all of that, he's charging his finder's fee $20,000. Right? That's a big, big violation. We cannot do this. Okay? So he's been violated. He's been fined, and he's gonna pay $250,000. I'm not too sure what's gonna happen to his license, but the point here is that please, please, please do not jeopardize your license. Okay? You don't want to charge any finder's fee. You're a licensed agent, right? If there's any charges that you're going to be doing, it's going to be upfront, it's going to be disclosed, and you're going to have them sign those documents. You just can't simply say, hey, the rent is 1725. I'm going to, charge you $20,000 to find the property. I don't know which tenants were actually paying him, right? But there was enough of them that he has to pay back in fines $250,000. Okay? So let's learn from Mr. Ari here. All right, guys. Next one is that when you buy a house, right, you are a real estate agent. You have to advise your clients. One of the things that you must mention is that, hey, you're a new homeowner now, congrats. First thing you got to do is change the locks. You want to add a cameras on the back and the front, that's good. But if you want to add the cameras later, that's fine. Maybe you want to wait, get it professionally done, no problem. But changing the lock should be done within 24 hours. Why do I say this? Why do I say this? Is that we just heard this story that one of our agent sold a property. Now the homeowner says, hey, for some reason, I hear something in the backyard and there's a small room going from the backyard and everything, and I feel like someone is there. And he didn't take action on the first day, and it happened again in the same week, right? And when he actually went in the back, it was the old homeowner, the person who actually sold the house, with another guy there. So first of all, what the hell is he doing at that property, right? He doesn't belong there. And and he's like, oh, I'm just here for a few minutes. For what? So the current a homeowner called the cops, changing the locks and adding cameras. So the point here is that just tell these guys or your home buyers right away, changing locks is a must, right? Some of these homeowners have this property for a long time. Maybe they give keys to other people. Regardless, even if they have not, your job is to change the locks. You don't want anybody coming in middle of the night and violating your property. Okay? So be that professional person and telling them to do though. Okay? How about another thing from your home buyers is that, hey, I like the property, right? But Arnold, could you tell me, which schools are good in this place? Or Mr. Ali, any good? Is this a neighborhood good or not? We just can't discriminate and say, hey, this or that. We want to do the research. We want to find out what's going on. We have tools for that. And homeowners or home buyers are relying on realtors to do the research, right? You're the professional. You got to know the neighborhoods. One of the things I'm going to show you the tools and everything, but one of the things is that you want to tell your clients as well, hey, drive around the neighborhood, whatever neighborhood you want to go to in different timing, and feel that neighborhood out, right? That's number one. I'm going to do the research that's going to be on paper, and I'm going to show you how you do that. For that, you want to use RPR, right? Majority of you guys I see on the back end that you guys have a login, you guys are good. Some of you guys don't have the login. I'm going to give you the link or tell you the reason why you're not able to log in later on. But let's talk about the tool itself. So we have this research tool. So it's called RPR. It's part of your One Key MLS membership. So you just need to have your login. Once you're logged in, on top here, there's a research option. When you click on this, there's many different research options. What I want you to focus on is your neighborhood search and your school search, right? So once you click on those, so first one, I did the school one, I just typed in Valley Stream. If I want to be in Valley Stream and I want to see what type of schools are there, I can just type in Valley Stream and I can find out the schools, the school ratings, and I can even create a report based on that. Okay? Same thing for your neighborhood search. You just type in the city, state, zip, or the neighborhood, and it will do the research for you. It will give you a summary, it will give you housing, people, economy, quality of life, different stats accordingly depending on the area that you chose. Then it will tell you what is the market trends. How many times people ask you, hey, is this a seller's market or buyer's market? It's definitely a seller's market. Why? There's not enough inventory. Okay, so when you guys see this, and every neighborhood will be a little bit different, right? There are some neighborhoods where they have plenty of inventory versus there might be another neighborhood that have very little inventory. Okay, so everything is not just set in stone. Everything is going to be different from neighborhood to neighborhood. Okay, you will get those type of stats. Next, you can see in that particular area what is the medium sold price, right? 650, and it seems very legit for your for your Valley Stream, right? You guys are realtor, you guys have sold plenty of properties in Valley Stream, and that price seems legit, right? And you guys can see more stats for those sold properties. Another one is that your price range comps that's been sold, right? There are some houses that's been selling for more than $900,000, but we don't have a lot of those. And on top of that, we don't have any houses that's going to be below $400,000, right? Very little. Majority of them are between 4, 5, 6, and 7, right? And the maximum is your $600 to $700,000. So stats like this can help your client determine, hey, the price is right or not, depending on what property they want to purchase. And it also tells you, especially for some clients are just want to know the livability, right? How's that neighborhood living there? how's the housing? Is the affordability is there or not? Not really in Valley Stream. The neighborhood, access to life, work, and play is really good. Transportation is really good, right? The environment, clean air and water is fine, right? 67%. So different neighborhoods will have different stats. So you are, especially when you're as a realtor, when you're talking to your client, you want to provide them different area reports, especially for the schooling. There's some. This one does not show you the crime rate, but there's some other websites where you can do the research for your crime rates for any area as well. Okay. If you guys don't have access to RPR, one of the reasons can be that you did not complete your orientation with LIBOR. So when you sign up with LIBOR, they usually send you an email. They say, "Dear Mr. Realtor, this is your LIBOR member ID. This is your NAR member ID. But remember, you have to complete this course." Right? It's a orientation. I believe it's about 2.5 hours. You can get that done. But those people who do not have access to RPR. Okay. So I think after this meeting, your goal should be, let me actually try to log into RPR, play around with it, ask me if you have any questions regarding RPR. Okay, before we move on, any questions so far? Anything that we mentioned, guys? Anything on your mind? All right. Next, guys, as a mortgage loan officers here, right? Your client might say, "Hey, I don't file my taxes properly, or I just don't have enough income to show on paper, but I own a business. I have enough income coming through that. Does your company or does LJ Mortgage team have any options?" So as real estate agent, you might not know all the details, but we just want to go over a loan program that might be good for yourself or someone that you know. So this is where it's no income check. We don't check their tax returns. We don't ask for their pay stubs. We don't ask for any of that, right? So how do we actually qualify them? So that there are some restrictions which we're going to go over as well. So number one is their credit score. The credit scores has to be very, very solid, 720. So we need 720 or above credit scores. For down payment, we need 20%. Remember we spoke about the myths that you need 20% down payment? That's for your FHA and conventional. You don't need that. But if you're going to go with non-QM loans where you're not showing your income, you have to put down 20, some cases 25% down payment. Why? Because the lenders actually want to say that you have enough skin in the game, that you're putting enough of your money in that same property where they're going to lend you some money as well. Okay? They don't want to just you put in 3% and they put 97%. They don't want that on this type of loan. Okay? Your debt to income ratio can be 49%. Your closing cost is between 5 and 7% for these bank statement loans. Some key points here is that is no income check, no tax returns. So how do we actually qualify? We qualify that particular client based on their bank statements. So if it's a business, we need their business bank statements. So we need 12 or 24 months. If they give us 24 months, it's even better. They will get better interest rates. Okay, so we can look at their 24 months bank statements, see how much money was deposited into their bank account, and give them how much and tell them how much they qualify for. In most cases, most of the files that we have done for bank statement loans, these clients qualify for a larger amount, right? And you'll be surprised, hey, does my client really qualify for this amount after we review those? Because we're only looking at the deposits that's going in, and we're taking a portion of that to qualify. Okay, so as long as they have their bank statements, they can provide those, we can qualify them. But just make sure when they're providing those bank statement loans, they're providing their bank statements, right? They got to make sure that there's no transactions that's non-efficient funds transactions, meaning they didn't have enough funds in that account. That's a really red flag. The lenders don't want to see that. If you are putting down 20% down payment, your credit score is good, they're expecting you to have bank statements where, your balance doesn't go below zero, right? That is a red flag. Another good thing about this loan is that it can be primary or for investment. You can live there or you can rent it out. Okay? And also, this is a conventional loan, and your mortgage will get removed after 20% equity for this bank statement loan. Okay. So if you're going to go with one unit, you can put down 20%. But if you're going with two family, then you need 25%. So not just the down payment, but the bank also wants you to have enough reserves. So if your mortgage payment is $5,000, they want to make sure you have $15,000, 3 months of reserves sitting in the bank just in case. Okay. So the negative thing about this is that it's gonna come with prepayment penalty, usually 6 months of interest if they're refinanced within first 1 through 5 years, and that's negotiable too when they're actually purchasing the loan itself. Okay. So the prepay penalty, meaning let's say they buy it today and they say, hey, I got this loan through a bank statement, but next year I want to get a regular conventional loan because I have a co-signer, or I just qualify on my own. I don't need this bank statement. And the bank is going to say, hey, no, you need to pay at least 6 months of interest, then we can release this loan. Okay. Next, another negative thing about this type of loan is that it's a borrower's paid comp, meaning the commission that they have to pay, or it's going to be a larger closing cost because they're paying this portion as well. And because it's a bank statement loan, there's no gift funds allowed. The bank wants to see, or the lender wants to see, that you have your own funds and you're not borrowing money just to show us that you can just qualify, but in actuality, you don't actually have these, funds. And the loan can go up to $4 million. Okay. So the pros here for this bank statement loan is that you don't have to show your taxes, right? No tax returns, no pay stubs or anything like that. The negatives is that it's a prepaid penalty. You need more down payment. You need better credit scores than your conventional or FHA. Okay. Any questions, concerns on bank statement loan, guys? Anybody? All right, guys. So some clients would ask for the first payment. So let's say I closed my deal on January 10th. Will my first payment come in? In most cases, it will be on March 1st, right? The first mortgage payment is due on the first day of the second month after closing. So think of it like this: that the maximum you can go is 60 days. So there are some scenarios where if you close on June 1st, if it's 61 days above, then might have a problem. In most cases, just think of it, if you're closing this month, the next month you'll get a break, and your first payment will be due on March 1st. One of our agent asked this as well, so we want to go through this with you guys. Okay. So next, guys, this is a very common question, and you guys gonna hear this more often when the interest rates are dropping, because there's gonna be more competition. There's gonna be a bidding war, and buyers gonna ask you, "Hey, should I waive my home inspection?" Right? Anybody wants to answer that? Should you waive your inspection?
Not at all.
Not at all, right? Perfect. So that's a great answer. So the answer should be no, never waive your home inspection, right? Even if it does not give you any negotiation room or anything like that. But when you're buying a house, you're buying such a big thing, right? It's hundreds of thousands of dollar property. So you want to make sure that what is the property's condition that you cannot see with your naked eyes, right? When you're simply looking at the property, you cannot know if there's any damage, structural damage, or if one of the woods or anything like that, if there's a pest issue, or it's just like so many things goes on behind the walls, right? So as a real estate agent, I always say that, hey, I highly recommend that you do a home inspection. If there's any big issues, we'll just move on. You're the buyer, I'm your realtor, I'm on your side. I don't want you to go into something where we have a bigger issue later on. So let's just find out if there's any big issues. If there's something minors, we're not going to take any action on it. If there's something big, then we can take some action on it. That you never want to waive it, even when you have these the bidding works come in a few months and everything like that. Just have this conversation with them, because you're going to be doing the right thing by advising them, right? It can definitely be a deal breaker, right? We have seen that, but you're still doing the right thing by your client, right? They will be thankful that you're doing this. They'll be thankful that you're advising them to do the right thing, right? It's gonna cost them maybe 300 to 400 or $500 for this inspection. It's non-refundable, but it will make you, guide you in the right direction. Okay. How about this? Is short sale or foreclosure better for the seller? So if someone is going through some hardship and says, "Hey, you're the real estate agent, man. Should I do this short sale or just go through foreclosure?" Anyone? Someone got to answer this, right? Is short sale better or is foreclosure better? Or none of them better?
I think a short sale is better. Sorry,
Okay. So Pramod says short sale is better. Anyone else? Agrees,
because
disagree?
foreclosure is staying like almost 10 years in your record. It's like 7 years, I think.
Okay.
Yeah, 7 years stay in your record. But short sale is like you giving up properties that dealing direct to bank. I think this is better.
Okay, so you say short sale, good. Okay. Rupender, I think you were about to say something.
Yes, Pramod answered.
Good.
Short sale is better for the seller.
Perfect, perfect. Okay, so the short sale is better. Why? Because you're requesting. Because you first of all you need to have a actual hardship. So what is the hardship? That you losing your job, right? You are not able to make the payment, your mortgage payment, right? So the bank is upset. Hey, you have not been making your payments. It's been a year now. What's going on? If you have a hardship and that seller, first maybe they were just avoiding all the realtors, right? They're just trying to skip their payments. They're like, forget, I'm gonna not take any action. Let's see what happens. A year goes by and they legitimately have an issue, right? They have a hardship. They're having a conversation with you. You want to tell them that, hey, short sale is better. I'm going to try to negotiate with the bank and explain to them you actually have a hardship. You're not able to make your mortgage payments because of this. And over the years now, your mortgage payoff balance have increased dramatically because they're adding all these fees and everything to it. And now your house is worth maybe $500,000, but your mortgage that you have is 550. So I'm going to try to convince your bank and see if they can sell this below that 550 that you owe them. Simple as that. If you can beat that guide with them, they can give you that listing. So you can actually list it on the market and try to find a buyer and goes with the highest offer. But why short sale better? It has a less effect on your credit scores compared to foreclosure. Foreclosure is basically you're giving up on that property. You did not try through, maybe you tried it through short sale. It did not get approved for whatever reason, and now the bank simply says, no, we're gonna take it through foreclosure. We're gonna take it to the auction and see and find a new cash buyer that's gonna pay off our loan, 550 or whatever amount that they're looking for, and you're gonna be out, right? In both cases, short sale and foreclosure, person is leaving the property for sure, right? But their credit scores will be less affected. They can purchase the house again in the future if they go with short sale compared to foreclosure a little bit faster. Okay, so I hope that you guys, especially the newcomers, you guys, if someone asks you, you want to say short sale is better. Okay. So one of our agents called and said, "Hey, I need to find a block number and a lot number for a property." So I just want to point this out that it is available on GeoData. So on GeoData, once you're logged in through Adam now, once you type in the address, you will see under address and legal ID, you see block and lot number. So the first before the dash is your block, and then after the dash is your lot. Okay. So let's talk about you guys, right? As realtors, will you remain active as a real estate professional during the next 2 years, right? Are you certain? Will you be, not certain at all? This was a survey through NAR, 7%. Somewhat, 17%. Very certain, 76%. So looking at this chart is like maybe around 25% people are not certain that they're going to be, staying active as a real estate professional. If you're attending this meeting, you're watching this recorded later on, that means you guys are interested in learning and all that, right? You are showing your properties to your clients, and you guys are gonna be on this level here. But if you simply don't have enough time, I'm not judging anyone. Everybody got their lives, full-time job, part-time job, family, this and that, and you maybe got your license. We don't want to judge you on that, but you have to ask you that question to yourself. There are a lot of real estate agents that are really experienced, and they will not, jeopardize their license in any way or form. They love this. On the other hand, some people simply don't care, and because they have a solid job already, right? So you have to decide, where do you fall. And now let's talk about experience. If you are a real estate agent, less than 2 years of experience, your goal should be to close between 1 and 5 deals, right? You don't want to be this 20% where you're closing 0%, right? Or you're closing zero transaction. Almost 20% of the newcomers did not close any deal. You want to be where you're closing 1 to 5 deals in your first 2 years, okay? Compared to when you get some experience between 3 and 5, some of you guys are going into that zone now. I think you guys should be focused between 6 to 10. You want to be part of this 25%. It is definitely possible. If it's 3 years, 4 years, 5 years, you guys know the whole concept. You guys have seen the ups and downs. You guys have seen the inventory now. You guys are comfortable with the area that you guys want to be serving, right? You guys already went through a couple of transactions where you know the whole process, right? So why not do multiple of that? Same conversation, different people. Same conversation, different people, right? So you want to be on this between 6 to 10. So this year, you want to make sure that you're completing between 6 to 10 deals if your license is between 3 and 5 years old. And how about if you're 6 plus, between 6 and 15? We have some agents who have their license for longer than 6 years. Some of them are really aggressive, and they do fall in between 11 and 15 deals or 6 to 10 deals. You want to be comfortably doing 10 plus deals if your license is more than 6 years old, guys. Right? Why? 6 years is more than enough to know everything about real estate. That means you have renewed it 3 times, right? Every 2 years, you are renewing your license. You're paying this MLS fees. So you should not be doing anywhere, look at this, 6 to 15 years. If you're doing zero transactions, we got a big problem, right? We want you guys to be between 6 and 15. Anywhere between that, that's a good thing. On the commercial side, we know it's tough to be on the commercial side. There's less, buyers out there. But the residential part, you guys should be making your goal to these numbers that we just spoke about. So we'll share these slides with you guys later, so you don't have to write down anything, okay? And that all depends. When we're saying 6 to 10 deals, or you want to do 10 plus deals in a year, it cannot just happen without you putting in the hours, right? So average hours that you want to put in, at least 20 to 40. If you're doing anything less than 20 hours, right, you guys be the judge. I told you guys last meeting to start counting your hours. Hey, I showed this property, took me half an hour. This client took me 2 hours today. All of those in 1 week, and see how many hours are you spending. If you're spending less than 20 hours, you're not going to close any solid deals, and you won't be able to make good amount of commission from your license. So at least 20 hours. And to those experienced agents, right, 20 hours is nothing. Okay? And when it comes to all of this, it all comes down to, we have to pay our bills, right? As a family, we have to run the family. The reason you're doing other jobs is because it's consistency, right? You're making that paycheck every week, every month, whatever, is enough income coming through that, so you can't let go of that. And we don't want you to let go of that. Have that. You want to have a transition from that job to a real estate. You can definitely do it, right? But your goal should be to make 50K in a year from your real estate license, right? How are you going to do that? We just spoke about those things, okay? And this is just a reminder, guys. Your solid job description should be, hey, I'm a real estate agent. I have to be under contract. If I'm not under contract, I need to figure out a way to be under contract, right? Do I need leads? Do I need, different things to new inventory to learn? Whatever the case might be, you want to be on top of that, be under contract, right? You're going to be doing this only by showings, and showings. If you don't like to travel, if you don't like to show, if you like to cancel on last minutes, there's no way you're going to be closing those numbers that we spoke about. Once you're under contract, just rest assured your buyer's attorney, their loan officer, their title company will take the file to the closing table. You're going to come back at the final walkthrough. But your job is to show them plenty of properties. All of these guys, right? Buyer's attorney, loan officer, title company, none of them come in play until you take them to under contract. So your job is super important. Your job is, I feel like in a real estate transaction as a buyer's agent, is the most important. Unless you find them the right property, that file is not going anywhere. Okay. Next, guys, is your viewing your properties on MLS, right? You can do it through Stratus. Some of you guys are using it through that. That's perfectly fine. Otherwise, KV Core has everything built in. So under listings, all MLS listing, see what is available there and try to do that on daily basis. Every single day, you should be checking this inventory. Look at the activity that's going on, take some action. If you see this person here saw this property 3 times, call them up. Hey, could I show you this inside? Could I schedule an appointment for this property? Okay. So we got a few minutes left, guys. If you don't have any social media account, create it. Right? If you're not posting, please post it on regular basis. So if it's something just even resharing other people's posts, that's perfectly fine as long as it's real estate related. Right? There's a new property coming on the market here at auction on Roosevelt on February 5th. The lien is really small amount, 265. So if you have investors who want to bid on this, take them to the auctions. Okay. All right, guys, we are running out of time here. So any questions, concerns so far? Okay. Under the training on our LJ agent page here, there's a new training video that I shared with you guys going in depth with creating the whole transaction, about 15 minutes long, that will go through the whole transaction desk with you guys. Okay. All right, guys, because we're running out of time now, I'm going to just take it to the last page here. Just let me know if there's any questions, concerns, any way we can make these meetings better. We do send out a survey for you guys to fill out. I do appreciate you guys filling that out. But any topics that you guys want to add, just let me know. Any questions before we get going? All right, guys, so we'll leave it at that. Thank you so much for joining. I will see you guys next time. All right, take care, guys.